Moving averages are a crucial tool in binary options trading, providing traders with a clear view of market trends by smoothing out price fluctuations over a specific period. Essentially, moving averages calculate the average price of an asset over a given time frame, helping traders identify the overall direction of the market. There are several types of moving averages, with the simple moving average, SMA, and exponential moving average, EMA, being the most widely used in binary options trading. The SMA calculates the average price of an asset over a set number of periods, while the EMA gives more weight to recent prices, making it more responsive to price changes. The main advantage of using moving averages in binary options is their ability to filter out market noise, allowing traders to focus on the prevailing trend. For example, when the price of an asset is above a moving average, it typically signals an uptrend, while a price below the moving average indicates a downtrend. This information helps traders decide whether to place call, buy, or put sell options. Additionally, moving averages can be used to identify potential reversal points, particularly when different moving averages cross each other. A commonly used strategy in binary options trading is the moving average crossover. In this strategy, traders use two different moving averages, such as a short-term EMA and a longer-term SMA. When the short-term moving average crosses above the long-term moving average, it generates a signal to buy, call option, as it indicates a potential bullish trend. Conversely, when the short-term moving average crosses below the long-term moving average, it signals a sell, put option, indicating a bearish trend. Moving averages can also help in setting entry and exit points for trades. For example, traders may choose to enter a trade when the price bounces off a moving average in the direction of the trend, or they may wait for a crossover to confirm a new trend before executing their trade. Another important aspect of moving averages is the support and resistance levels they can create. When the price of an asset approaches a moving average from below, it often acts as a resistance level, and when it approaches from above, it can act as a support level. This can help traders predict where the price may reverse and decide when to enter or exit trades. Although moving averages are a valuable tool, they are not foolproof. They can lag behind price movements, especially in highly volatile markets, and may produce false signals during sideways or range-bound conditions. Therefore, it's often best to combine moving averages with other technical indicators and risk management strategies to increase the probability of success in binary options trading.